Well, the current market climate of weak investor sentiment, low credit growth and falling commodity prices has contributed to a drop-off in IPOs for 2012. But will the recent changes to ASX listing rules for capital raisings be enough to stimulate future IPOs? Sky News business reporter Nigel Freighter's caught up with ASX listing manager James Gerraty to find out.
Yes, I'm here with James Gerraty from the ASX, and we're going to talk about the state of the IPO market in 2012 and what's going to come up as well. James, thanks for coming on Sky Business today. Now, 2012 hasn't been a great year for IPOs, if I can put it that way. Take us through what's happened in the past 12 months.
It's been a struggle, Nigel, that's right. We haven't really got a momentum going of IPOs throughout the calendar year. Sometimes in past years the spring has been very bountiful, hasn't been the case this year. So I think it's pleasing that we've at least achieved what we have done, which is 47 IPOs and some success stories amongst some others that have probably found it more of a struggle. I think 2013 can only improve.
Give our audience a sense of how difficult 2012 is compared to previous years. I've heard that we have to go pre-GFC in some senses to say those were the good days for IPOs. Is that correct?
Pretty much. I mean, the IPO market has meant that companies have spent more time talking to us about structures, taking longer in the pre-IPO stage to really engage with investors, to have the confidence to pull the trigger and make an application. Many fail at that hurdle. Those that have come through have sometimes not succeeded through their offers. It's been a lot of work for little reward for everybody involved in IPOs.
So one of the major reasons that organisations float is to seek capital and get access to new funds. Given the current climate out there, does it really make sense for companies to float, given how hard it is to get access to that capital?
Well, I think for the Australian market, for some companies it's their best and only way, particularly at the smaller end of the market. I think venture capital is sometimes lacking for small cap companies. But I think your point is right. For middle and larger size companies, there's disagreements about price and value between potential subscribers and companies. If they can wait, I would think many are choosing to wait because the conditions are difficult, and there can be a better time for those companies to choose to list.
Because we're not seeing those mid-cap companies really float, are we? It's been a succession of small caps for some time.
That's correct, yeah. We haven't really seen the more substantial listings, and some would think that once we do see some more substantial listings and see them succeed, that will provide confidence in the IPO market for others to follow. So we're just waiting for that bigger stock to list.
Now, you're making changes, capital raising changes, the ASX is. What does that mean for listed entities and also IPOs coming up? What are the implications of those rule changes?
Well, the implications for all of our currently listed companies that are market cap 300 million and below is that they have greater flexibility now. If they go to their shareholders and ask them to have a greater placement capacity over the forthcoming 12 months, shareholders can approve that for them, and they can issue not just 15% in any 12-month period, but up to another 10%, so giving total of 25%. For IPOs, I think those companies that won't just list with one event of raising capital to sustain them through their exploration program if they're a miner, or their drug discovery program if they're a biotech, that they know that there's also that continuing pipeline of capital that's enhanced with our rule changes that were recently made.
They're not fundamental changes, are they? They're kind of tweaking around the margins.
We don't think they're fundamental. I mean, we're seeing very good take-up in the current AGM season for smaller companies to go to their shareholders to get those approvals. It's not to say that they'll all go out and raise that additional capital necessarily, but it does give them that option.
Now, we've seen the lower IPOs this year have an impact on ASX revenues, down by 11.2%, according to your CEO. Are you hoping these capital raising changes will maybe stimulate the market and get more IPOs out there?
Well, we, like all others involved in the market, have little control over what happens with the economy. But we think the rule changes that we've made over the last 12 months will certainly set the right conditions. We've updated rules for miners in terms of their disclosure. We've got revised continuous disclosure guidance note 8. So we think investors will be well served by the changes we've made.
Okay, time to get to our guest host now, Stephen Goldman from Capstream Capital. He will be joining us for the full hour, and we'll just start by getting your take, I guess,